Hello everyone, and thank you for tuning into the North Main Minute. I'm Joshua Dobie. As I'm sure you can anticipate, we get a lot of questions every week about the overall housing market. And when I'm talking housing, I'm obviously talking about residential housing as opposed to commercial real estate kinds of things, even though we get questions on that a lot as well. Now, we are not in the real estate business. We are not brokers. We do not provide mortgages or anything like that. But because so much of a financial impact and often net worth is found in our clients' residences or in their homes that they own, we're bumping into it all the time, having those conversations frequently about, okay, what about my current mortgage? Should I look at buying another home? What kind of price can I get on my current home? Here's the amount of equity that I have in my home. Is this something that I should utilize in different ways than what I'm doing right now? There are a lot of different answers to that question. Everybody's situation is unique, so I'm definitely not going to offer any specific recommendations for your space here, but a couple of broad items to keep in mind when we're thinking about the housing market for this year. I'm going to talk to rates first in terms of what we're anticipating for 2025 at this point. It looks like we're either going to remain steady or to come down just a little bit, especially relative to expectations here just a few months ago. There was more expectation of much larger rate cuts from the Federal Reserve Board here just a couple of months ago. It doesn't look like that's going to be the case at this time, as of the time of this recording. So we're not anticipating that there's going to be a significant drop in overall mortgage rates, not a one-to-one correlation, but definitely related. We don't anticipate there's going to be a whole lot of drop in mortgage rates at this point for 2025. So definitely important to keep in mind if you're looking to refinance or if you're looking to take out a new mortgage when you're looking at new property. Second big item to keep in mind. We're starting to see, not in every market, certainly not in every portion of a market either, but we're starting to see inventories rise, and we're starting to see the number of days on market, meaning how long homes are sitting on the market for sale, also increase. That's a little bit different than we've seen here over the last couple of years, where, especially in the extremes of a couple of years ago, you were seeing bids over asking prices, and some homes were never even hitting the market, that they were done in private transactions before there was even a listing on the MLS. I mean, it was really crazy. We're nowhere near that extreme right now, and there are still plenty of homes and plenty of markets which are very hot right now and moving very quickly, but we're also starting to see some expansion in terms of the number of days on market and also a reduction in the intensity of the pricing, meaning we're starting to see price cuts in some instances in some areas. And that's a little bit different from where we were before. Now, don't think it's straight lines on me here. Does that mean that they're going to keep going down and all of a sudden it's going to be, a buyer's market? Maybe, or maybe not. What we're just offering up is some of our observations based on actual data, seeing that there is a cooling off a little bit in certain markets around the country and in certain areas. So that's important in understanding what the intensity is, what the buyer intensity is. It could also be because the cost of capital is notably higher than what we saw here 3 years ago, that there are just fewer buyers in the market. So even though inventories are relatively low, as they're creeping up, if the number of buyers isn't creeping up, then you're going to get at a certain point a little bit of a supply over demand, and that will soften prices a little bit. And I think that's a little bit about what we're seeing right now. Third big item to keep in mind here as you're looking at things. When you're doing your planning from a housing standpoint, when you're looking at housing where we are right now, make sure you're doing your planning for the long term. I know it's sometimes when we're looking at mortgage rates, like, if I wait 3 months or 6 months, it may come down a quarter of a point. And yes, there are positive impacts that can come from that. But remember, it can go in the other direction as well. So you want to be mindful, you want to be cautious, and you want to be conservative in how you do your planning. Meaning that if from a cash flow standpoint, you're right at the edge in terms of where rates are right now, meaning in terms of being able to afford it, maybe look at something that's a little bit less from a cost standpoint and not put such a strain on your budget. That's my style. It definitely, different folks have different styles and preferences when it comes to that kind of thing. Remember, one of the concepts I talk about frequently, though, is financial flexibility. I want you to have that flexibility. So if you're right on the edge from a budget standpoint, maybe back down some of your expectations or wait to make that kind of move before you make such a significant investment that is indeed intended as a long-term kind of hold. If you'd like to reach out to us at North Main Financial Group, talk about your housing situation. As I mentioned, we're not real estate brokers or mortgage brokers, but we talk about it all the time, especially with regards to the overall financial plan. We'd love to hear from you, northmainfinancial.com.